Hey, it's Michael Saul, but everybody calls me Tiny. This video is the trade war is baked in, plus other excuses for the pullback. This is stock market analysis for the week of March 11th, 2019. If you would like to receive intra-week updates, go to www.attackthemarkets.com. Put in your first name, your best email address, follow the directions, and you'll be on the list. Join the Facebook group, facebook.com/group/attackthemarkets. If you like what you're hearing, give me a thumbs up and leave a comment so I move up the ranks in YouTube. It would really mean a lot to me. And if you never want to miss a video when one is uploaded, click the subscribe button and smash the bell, and you'll be notified when I upload a new video. Okay, so as the title says, the trade war is baked in. So that was the excuse this week, the first excuse I heard this week, as to why we were selling off. So we gapped up Monday. We traded up a little bit here. We got over that resistance. We did not close above the resistance, and it wound up leading to a decline basically the whole week. Okay, Friday was the best day because we opened down and then we actually rallied. I know it was a really minor down day on Tuesday, but the news was that, okay, the trade war is going to be resolved, but that's already been baked in. That's why we've been having this big rally. So whatever. I mean, people just can't be happy, right? So they're saying, yeah, here we go. The trade war is baked in, so there's no reason to go higher anymore. Now we're going to sell off. Okay, very good. Could that be the case? I guess, but I think it's more of a technical deal here. I think we ran into resistance. We tried to get over it. We couldn't on the first move. Yeah, we're back below the 200-day moving average, but look how the 200-day has flattened out. And I don't use the moving averages as magic numbers, but I do like to see where we sit relative to the moving averages. Okay, I always like to see that. I always like to look at the proper order, because what it does is moving averages smooth out the short-term volatility in the market. So, in my opinion, they are very valid. I'm not one of these big, the 50 crossed the 200, so it's time to short, or the 50 crossed the 200 on the upside, so it's time to go long. The golden cross and the death cross, because statistically, back testing, looking at, which is all you can do is look at the back test, right? You can't predict the future, no matter how hard people think how hard the people try and people say they can. But anyway, if you look back, the golden cross and the death cross, they just don't test out well. So I don't use it well. I don't say, oh, look, the 50's crossed below the 200, it's time to get short. Although over here it would have been nice, right? But again, if you covered down the lows, or if you covered before it got back to break even, which it's now underwater and the 50 is still under the 200, right? It's just one example. All right, anyway, so we pull back. It looks pretty orderly. It does not look like a waterfall type of move, something like this. And I'm going to be watching right here to see if this pullback leads to more upside, okay? If perhaps they weren't ready to get over that resistance yet, they tried to push it over, couldn't get the momentum to come in. Now it's pulling back. Now let's see what happens if it tries it again. Sometimes the second mouse will get the cheese. Very, very important concept to understand. A lot of times there will be a fake out move one way before the actual move comes in. Okay? So let's take a look at the other majors. Dow looks similar. The Russell, okay, the Russell put in the lower high here. We talked about this last week. Mid-cap, similar. And again, I'm not saying, the Russell and the mid-caps had lower highs, so it was a short. I said it last week. I'll repeat it. You can go look back at my old YouTube videos so you could see I didn't say that in and of itself was a short signal. It was something to watch, but it wasn't in itself a short signal. I guess it was, because it wound up being a nice little short for a trade. But like I still don't think we're completely out of the, done with the upside here. So we got to watch. And here's the NASDAQ. So the NASDAQ also pulled back. Didn't have as rough as a time as the broad market. Let's look at the sectors. Here's the semiconductors, right to the 200-day. Nice reversal. KLA tanker. Pull back to the 20 EMA, see if that's going to come off of that, and if that can get a rally. Here's NVIDIA still rotating in this range, still watching for this range to break. If you want to play it inside the range, that's up to you, of course. It's your money. Do whatever you want. But to me, I want to see it leave the range. Here's like an ADI, nice pullback off the highs. Intel, Pull back to the 20 EMA, nice as well. See if that can get going. Let's look at the banks. So the banks between the 50 and the 200, what do I call that? I call that ping pong, right? They like to trade between the 50 and the 200. So there's no signals here. Here's Bank of America. Here's Citigroup, right off the 50-day moving average with a nice candle on Friday. Here's JP Morgan. How about like a Zion? Right, watch the 50-day moving average. Here's a Northern Trust, right at the 50-day moving average. So we want to watch here, but I don't really see buy or sell signals in these just yet. Here's Goldman, nice push off the 200-day moving average. Could Goldman be ready to go? If it could clear this little double top here, this little mini double top, does it have a chance to get to the 200-day moving average? Want to watch that. Broker-dealer index. Okay, below the 50-day moving average. So this has to get a recover because this was a pretty sharp move down. This has to get a recovery back above the 50-day moving average. It would be nice if I would have finished that last sentence, right? All right, let's look at some of the glamour stocks. Amazon, still too sloppy for me to make a choice on. Apple, we talked about last week. What did it try to do last week? It tried to push up above here, but formed the doji, and then, boom, pull back, still in its range. The Zuck book. So the Zuck book, we've been watching. It had the wedge. It came out of the wedge with another wedge. It popped up to the upside, right? We saw that. Boom, boom, boom. Nice little move. Pull back to the 200-day, and it held. So is the downside over for Facebook? I think it's a little too early to tell, but if we take out last week's highs, could get a nice little move up. Let's see, next resistance is up there at 180. So that could be a nice move. And we've been watching this for a couple of weeks. Like I said, go back, watch the old videos. We've been highlighting this wedge, and it finally decided to make a bit of a move here. Okay, Netflix, downgraded, but not really doing much, just kind of sitting around. Caterpillar, yeah, Caterpillar, which was hanging above its 200-day, actually fell below it and fell below the other key moving averages here, the 20 EMA and the 50-day. So that's not looking so great, and John Deere is more sloppy than anything. How about Alphabet? Yeah, Alphabet, nice hold of the 20 and the 200 converging here. Nice hold and a reversal here. Let's see if that could get a bounce. Bonds. Yeah, bonds on the bounce after coming down to the 200-day moving average. Bonds on a nice bounce here. Let's see if they could take out this this level here. Could do what they call a triangle pendulum. It comes out one way, and then it goes back the other way, and it comes with a little bit of momentum here. Let's see if it can go back to recent highs. Here's GLD. Also, GLD had been selling off, and then it coiled up for a couple of days, and it popped into the 50-day moving average. Watch this. Here's oil. Oil consolidating here. This is a USO. All right, so let's see what we're doing here. Let's see what oil is doing. There we go. All right, so not really a bull flag, but it is a consolidation pattern. So if it were to pop out of this consolidation, could get back up to that 200-day moving average. So let's do the recap. We tried to get over resistance. We couldn't get over it. The first try, we pull back. We are over the 200-day moving average, but the 200-day moving average is not showing a bearish slant to it. It's basically flat. I want to see if the market can rally off of this pullback, could try to go and could try to get a second mouse move, which is breaking over the resistance the second time, right? The first time's the fake out, the trap springs, and then the second mouse comes in and says, hey, here's the cheese, and look, the trap's already sprung, and then he gets it and runs away, right? Now, what if we continue to pull back? Well, then we have to watch the 50-day moving average, which is lined up basically with these February lows. Okay, any questions, tiny@attackthemarkets.com. Don't forget to join the email list at attackthemarkets.com, the Facebook group at facebook.com/group/attackthemarkets. If you like what you're hearing, give me a thumbs up and leave a comment. And to never miss a video, hit subscribe and smash the bell. Yep, I went over everything again, right? Nothing wrong with being thorough. Have a great trading week. I'll talk to you in the intra-week updates or in next week's video.